Yeah, hi Will. The funds are playing a big part in the market, which is a little less transparent, but the fundamentals are essentially bullish as well. We saw at the back end of last year, very extreme weather in West Africa, which continued into this year as well. So heavy rain while the crop was being grown led to a spread of crop disease and delayed the harvesting. While this year we've seen the El Nino come in, which has affected a lot of commodities in different ways around the world, brought dry weather to West Africa. So the supply and demand balance is tight. You mentioned Valentine's Day, so obviously cocoa consumption is increasing at the moment. But West African farmers need some more time to be able to increase their production. Trees need to be planted and allowed time to develop, which takes time. There's fear currently there isn't enough beans in the world to meet some of the long-term contracts that are in place, so that maybe not meet the demand that's there. The risk in today's price environment is that this could continue for the next couple of years until the market has time to kind of sort itself out. And this cost will essentially be passed down to kind of you and me as a consumer. But the most important thing at the moment is the farmers need some support to ensure longer term security of supply.
So is it your expectation then that this, in a sense, this surge that we've seen, because we saw it in sugar last year as well, it was absolutely rip-roaring, but this is justified in terms of cocoa specifically, that there can be a reasonable expectation, barring any kind of, demand constrictions, whether it be, the likes of a Hershey's, for example, engaging in a little bit of shrinkflation or trying to mitigate that aspect of it, that there is a severe shortage when it does come to supply, and this is something that can continue not just for the next couple of months, but for the next couple of years. Is that what you're really getting at?
It's been a much more attractive asset for fund buying. So the funds have been buying quite heavily into the cocoa markets. But essentially, the supply-demand economics are very challenging at the moment. But you mentioned sugar there. So El Nino, again, has had a really big impact on the sugar market. Brazil is currently being relied on quite heavily to meet global demand. We expect there should be enough Brazilian sugar to offset things on a global scale. But there's more concern at the moment about the shipping markets and its ability to export the sugar out of the country. You see in India as well, India is unlikely to export sugar this year as things stand. Their interest at the moment is geared towards ethanol production after the government lifted some restrictions that were in place there. We've seen challenging conditions in Thailand, which is the second biggest producer in the world and the biggest in Asia. Monsoon rainfall is very low there during the development of the crop, which will have an impact on production. Within the Asia region, Pakistan and China are picking up some of that shortfall. But February and March will be very decisive for the Asia sugar market. Production in India next year could increase if the harvest goes well. But you mentioned last year the rally, but we saw a drop in December, which actually attracted an increase in demand at the early start of this year. But we see prices above 24 cents a pound maybe deterring demand, especially in China and the Middle East. We're currently trading between 23 and 24 cents a pound.